to Market Insight for the week of September 25th through the 29th. So starting with our top-down approach and looking at the monthly, nothing's really, excuse me, nothing's really changed on the monthly. We've been in a bullish it's in a bullish markup, and we've been anticipating a pullback with a target of around the August 22 high of 43.27.5. That's a number we've talked frequently about over the past several weeks. So that down move is now in progress. That reaction is now in progress. And so far, the reaction on the monthly has had light volume, right? Though there's still 5 days left in September, so we want to be aware of that. But in general, this looks like it is much lighter volume than what we saw in earlier down bars. And we can look at that. We can look at the last down bar that occurred in August, one that occurred in February this year, and then the one that occurred in December of last year. So those are the 3 down bars that we've had since the beginning of this up move. And we can see that August volume level was much higher than what we have now, as was the February and even the December, still pretty high volume compared to where we are now. And it's pretty unlikely we're going to get there in 5 days. So this last monthly down bar is quite a bit lower, so that indicates more of a reaction and rather than supply coming in. So the current, as I say, the current down move is more likely to be just a normal reaction coming into support here, rather than the start of a new down move. All right, let's take a look on the weekly, see a little more detail here. So last week's effort to go up on increased volume met resistance at the highs from a couple of weeks ago and even longer than that, coming up into the pocket area here of this formation, and then the underside of the weekly demand line, right? So we have a bunch of things, bunch of resistance. We got the pocket resistance, we got this high and this high, and then the underside of the demand line. Demand lines provide support until they get broken, and then they typically provide resistance. Old support becomes new resistance. So the weekly closed down on that week. It was on Friday. We'll see that in a moment or two on the daily, and closed in the middle of its range, slightly below the middle of its range, and it just indicated that buying was checked by selling, and that created the upthrust on the daily, as we say, and led to this week's down reaction on good volume as well. And remember, we saw some pretty good days on the daily, down days on the daily, and trend days down. And we mentioned in deep practice that the reason we saw that is because we're in a weekly congestion. And I went through this in some detail on Thursday's deep practice, bringing in David's conceptual map of the market and looking at it from higher time frame perspective, and then the trend runs that occur on the lower time frames within that trading range. And that's the way David used to conceive of the markets, and it's a very, very useful way to think about them, and especially when we can combine the higher time frames with it and get an even better edge, I think. So in any event, review that if you weren't there or you forgot about it or aren't clear on it. So now we're coming into support, that support area that ranges from the 43.50 low here down to the August 2022 high of 43.27 and change. Now we could go a little bit lower. We've got some volume coming in here, so we could go a little bit lower than 43.27, perhaps down to around 42.85. 42.85. Going down to that level will still retain the characteristics of a test of the vertical acceleration area in June. And probably this is better seen on the monthly chart. Let's go back to that. Come here, monthly, where'd you go? Let's go back to that for a sec here. And the idea would be this. This is the vertical acceleration bar here. And we could come down a little bit lower, just around the halfway point, maybe slightly below this bar. And that would be about 42.85. Now, if we did that, going to that level would still retain the characteristics of a test of the June vertical acceleration area, right? And it would also flush below the 43.27 support, and would encourage, premature longs to release their contracts to the benefit of the larger players and all of that sort of stuff, right? So, but it could go down to that level, come down to around 42.85 area, give or take. And then, of course, price and volume on the lower timeframes have to reflect that that area is starting to hold if price gets down there. So that's the idea behind that. Let's go back to the weekly here. And I think the odds of holding the 43.50 to 43.27 are high, but we want to be aware of the other possibilities as well. Now, so we would also have 43.85 in there, or 42.85 as well. Now, if the market's much weaker than I'm seeing here, and it's unable to hold, 43.50, 27, 42.85, then we're more likely to go all the way back down to the bottom of the weekly demand line. And that's this green line here, the weekly demand line around 4,200, where we also have a horizontal support line at 42.08.5. So this would be that, and that would add confluence or support to the weekly demand line. And that should be pretty strong if it gets down there. So those are the support scenarios as I see it. Again, with the odds favoring we hold up in here in this area rather than going down, but with the understanding that we could still do that. And we've got spots. If it does do that, we've got spots where we can stop, look, and listen, as Bob Evans used to say, and see what's going on at those levels to see if the lower time frames are starting to hold in there, or if they're not, if they're still weak and we've got more downside to go. All right, let's check the daily. Talk a little bit about that. So we'll read this. Last Friday, we get the up thrust on a large downside volume. I think this was Friday's volume, and that was pretty much a trend day down. Monday, we tried to hold the daily demand line here, right? This is a demand line. We try to hold the daily demand line, but look at how we did it. We do so on a narrow range, a mid-range close, and very light volume. So this just reflected an inability on the part of the buyers to gain an advantage. There was really a lack of good solid demand here, as we see in the price action and the volume. Tuesday saw the market slide down, kind of slip sliding, painting a lower high, a lower low, and a lower close. And it did so on expanding volume. Bearish, right? That's bearish. It's not bullish at all. Even though it closes mid-range, That was just a little bit of short covering, most likely, right at the end of the day coming in. So anyway, Wednesday tested Tuesday's high, actually came up and tested all this area up in here, plus the underside of the broken daily demand line here, the daily demand line. And then fell into a trend day down. Thursday, no lift from the lows of Wednesday, just continued that trend day down. And it broke the 44.34 support we had highlighted last week as the objective, as the initial objective of this upthrust. So that target was met. And volume was quite high as we were coming through that as we approached support, and we see, and that is leading us down to the second target somewhere between 40.50 and 43.50 and 43.27. So our first target was met, and we're almost at our second target. And Friday started to see buyers become active, right? How do we know that? Well, we can see they're active by the shortening of the thrust. Shortening of the thrust. Made a lot of progress down the prior day on Thursday. Friday, not so much progress down, and still pretty decent volume. So some buying's coming in, but note that overall volume has expanded to the downside, and indicating that sellers are very active at this point, or very active during the week. And at this point, although we see some shortening of the thrust and some evidence of early buying coming in, we don't have strong evidence of buying. We don't have evidence of strong buying. We don't see a bar coming like this, a bar that dips underneath all of this and comes back up and closes and does so on decent volume. We don't have that. That would be more evidence of buying. Right now, it's just very, very preliminary, and this may or may not hold. We don't have evidence of strong buying, and so we have to assume that the sellers continue to still retain control. Now, let's talk a little bit about resistance next week. To start with, early next week, Monday, Tuesday, watch Friday's high. And then the next level of resistance is obviously 44.34 area, because we broke that. And then if it does start pushing up here, if we do start finding support and it pushes up and breaks this, starts closing above 44.34 and breaks it, then the next level is going to be in this 4,500 area. Again, it's the pocket, it's the underside of the daily demand line, and it's also, these highs are resistance here, but it's also where we started to see the supply come back in earnest. We saw supply come in here, and it stopped at that point. The sellers pulled out of the market for the moment to see what buyers would do if they could lift the market. They were unable to do so, and then selling resumed. So if we get back, and that's where, and this is the area that it resumed. So this will be an important area, 4,500, 45, I forget, 15 or so, those highs in there, if we get up there. So that would be the resistance profiles. Friday's high early in the week, on Monday, maybe Tuesday, then the 44.34, and if we are pushing up, then 4,500, maybe slightly more than 4,500, 45.10 or 15, something like that. Okay, all right. So let's take a look at the major markets and see what they can tell us. And as usual, they have a pretty good story to tell. We see that all three of the markets, all three of the major indices sold off, and all three came down after each having an upthrust, starting off with an upthrust. Now, the NASDAQ again will be the market to keep an eye on for clues about whether the market's holding or whether it's likely to go down below the 43.50, 43.27 level, down to maybe 42.85 or so, or even back down to the bottom of the daily trend channel. Now, why do I say that? Well, the NAS is not far off of its intermediate support level here. I mark that with an A. So should the NAS start holding there, then it's going to likely have an effect on the other markets, and they'll be holding in their areas down here, their low areas here. And if the NAS can hold and starts to push up, it'll pull the other markets with it. If the NAS can't hold this area and starts dropping down, then it's going to drag the other markets down with it. So keep an eye on the NASDAQ this week. It's going to be our little canary in the coal mine, so to speak, giving us a heads up on what we're likely to see in the other markets. So on tap this week for membership, we have Deep Practice on Thursday, the normal time. That's September 28th. We're back into day trading again. And I would also encourage you, if you haven't, last Monday, we started chapter 9, got about halfway through it, of David's book. And this was all on point and figure charts. It was actually going through an early point and figure, volume figure chart that Wyckoff himself used to use for day trading. Remember, Wyckoff wrote the first day trading manual, at least that I'm aware of, and that's known as Studies in Tape Reading. And then he wrote the day trading course that he published in, I think it was 1932, along with the the main course that everybody knows as the Wyckoff course. He also did a tape reading course as well. Anyway, worthwhile going through that if you haven't, because it really kind of highlights what Wyckoff was thinking and how he started to approach the markets and what he learned from his own observations and how that started to get reflected in his charts. And then, of course, David takes it from there and brings us up to current days and current thoughts with it. So highly worthwhile taking a look at that. And also quite worthwhile taking a look at last Thursday's Deep Practice, where we talked about, I think we did this kind of at the end, although I can't quite remember when we did do it, but we talked about how looking at trading ranges, not from a 5-minute perspective, but from the higher time frame perspective, because that, when we can frame out a higher time frame trading range, what happens inside of that trading range on the lower time frames, whether it's the weekly and daily, or whether we're looking at a 240-minute trading range and a 15 and 5-minute chart, there's going to be trend runs on those lower time frames, very tradable, and rack up a good number of points. So this is the way to trade trading ranges, and if you haven't reviewed that, it would be a good thing to take a look if you're interested. All right, everyone, have a great rest of the weekend and a terrific trading week next week, and I'll see you Thursday for Deep Practice at 8 o'clock p.m. our normal time. Thanks a lot, and see you then. Bye-bye.